Welcome back to Grown Quality. My name is Elian, and in today's video we will be looking at Lululemon's earnings. But before we're gonna dive into those earnings, we're gonna do a slight recap of the issues that have been happening or that have been plaguing the stock. Because we know the stock has sold down almost 35% since last earnings report. So what were the issues again, and what are the things that we will be looking for in this earnings call? Now, the first issue that we had was the US growth. So, growth in the US was slowing down, and we know that the CEO, Calvin McDonald, has told us that he saw a dynamic environment in the US retail. Now, this wasn't perceived as very good because it meant that there were more issues and they were trying to do everything, they were pulling every lever in order to make sure that they were coming out with growth. So that's not a very good thing when listening to an earnings call. And remember, this was from last earnings call, right? Not the most recent one of this week, but from Q4 23. So, what else was an issue we had from the previous earnings call? Now, this one wasn't in the earnings call, but this came afterwards. And this was the Mexico franchisee acquisition. Because why were they doing this? They were buying 15 franchise stores for an undisclosed amount. And well, with the issues that were perceived for the company, was this just to boost growth? Was this in order to step into that market and put their own capital behind it? Or what was it? It wasn't really specified in the press release. So this has to be cleared up as well. Then we had shipping, because shipping rates are going up, were going up, and we wanted to know if this was impacting Lululemon. Because if it did, that would mean that margins were under pressure. And that's a very bad thing, of course. That's not what an investor wants to see. So we wanted clarity on that part. And then finally, the chief product officer left. Now, we did know a few weeks, I think 2 weeks after the initial press release, that she went to Vans in order to become CEO of there. But why did she left the company? Was this just to abandon ship and had an opportunity elsewhere? Or was there something more going on? Now, by becoming CEO of another company almost immediately, that question was, well, kind of answered already, because that's not a process you just go through. There are lengthy processes. So this was something that was in the works already for longer. But if they could, a bit of more clarity on it would be nice. But those were the main issues that were being faced going into this earnings release. So let's dive into the actual earnings call, earnings release, the numbers, the business metrics, what other important things were said, and my opinion on it. So let's start off by looking at the key metrics of the business, like the revenues and the margins. Now, I made some notes with it. So let's go through them together. I have my screen right there, so that's why I'm looking there. But yeah, let's see. Because revenues grew 10.4% from 2 billion to 2.2 billion. We had gross profit increasing from 57.52% to 57.72%. So a 20 basis points increase. And what this increase consisted of, we will go into at a later part, because they given us what the exact reason was for the increase. And that's important with one of the issues we mentioned earlier. Now, we had income from operations going slightly down from 20.06% to 19.59%, but we had net income coming up slightly. So, why was this? Basically, due to the higher interest income, because the company has no debt. They do have capital lease, or they have leases, but they have no debt. So all the cash they have on the balance sheet, they can just invest in treasuries, money market funds, and earn interest income on it. So they got a bit from that. That's why their net income is slightly higher this quarter compared to last year. Now, overall, we had diluted net earnings per share of $2.54 compared to $2.28 last year. So that's an increase of 11.4%. And this is where the company outperformed the most, because while the estimates were for $2.20 of EPS on, well, 2.199 billion of revenues. So they outperformed on their EPS number quite a bit in comparison to estimates, and the revenue just came in slightly above the estimates. Okay, so then we have the revenues broken down even more because we have the Americas compared to last year, and this is where we saw a 3.4% growth. China mainland increased by 44.6%, and the rest of world increased by 26.9%. Now then we had the income from operations, so yeah, the income for those areas, and we saw that the Americas actually ticked down a bit. We saw China mainland increase a lot, and the rest of the world also, well, 50% year over year. That's incredible growth. And China even more. Now, we know that the Chinese really love American products, especially the American more expensive products. And, well, that's quite what Lululemon is. But it is very good to see that China mainland is really catching up to the Americas and becoming more and more important for the business, because that means that those numbers start to matter. So they can start lagging a bit in the US and China can compensate for it. That's a very good thing, in my opinion, and that's a good development. Now we had income from operations overall coming up 7.7%, and then the income before income tax was up 11.4%. Okay, so then we got some more financial highlights, and the thing I really want to look at here is the comparable sales increase of 6% or 7% on a constant dollar basis. Now, what we have to look at here is that the Americas comparable sales were flat for the first quarter or compared to the first quarter of 2023, but China mainland comparable sales increased 26% or 33% on a constant dollar basis. Rest of world comparable sales increased 23% or 26% on a constant dollar basis. That are really, really good growth numbers in China mainland and rest of world. And Lululemon has a reason for this. They have a thought about why this is. And I will get into that later, more towards the end of the video. So if you want to know, just stick around to the end. Okay, so all those numbers are, well, they are fun and all, but what other things were said? Now, this is a screenshot from my website, from the article I wrote over there going over the earnings release, but what they said was that the buyout of the Mexican franchise is done for $160 million in cash. Now, cash is preferred for Lululemon stockholders because you don't get diluted. It is expected to close in the next couple of weeks, and the company expects the acquisition to have an immaterial impact on the financial results for fiscal year 2024. Now, the reason behind the acquisition, as Megan Frank, the CFO, says it, our partner has built an incredible foundation on the brand in Mexico. Our acquisition will allow us to more efficiently continue to expand, grow our community, and enhance the guest experience. So basically, what they are doing is put their own capital behind, well, Mexico, basically, because it's now not a franchise anymore. Well, it is for now, but it won't be in a few weeks. So basically, they put their own capital behind the Mexico franchise or behind the Mexican stores in order to grow it and scale it more efficiently and possibly have more runway of growth over there. So that's a good thing. And it's a good thing that they also say that it will have an immaterial impact on this year's numbers, because that means that they are not chasing the revenue. Okay, now, what other thing was there said? The SG&A expense were 38.1% of revenue compared to 37.4% last year. You may have seen this in a previous slide, and the 70 basis point change was lower than the 130 to 140 basis point change from guidance. Now, this was driven mostly by timing, better revenue, and lower expenses. That's the part I left out of the screenshot, but That's what they say about that. So basically, they hired smarter or later in the quarter. Okay, so then we had a few more things because, well, McDonald, the CEO, seemed very honest about missed opportunities in the US in regards to women's clothing and the bags business. Now, why was this important? Basically, they came in with very minor growth in the US. And him being open and honest about being able to perform better, leaving opportunities out there, not fully capitalizing on them, means that they are really being honest on top of their game and trying to improve. Now, what was it that they left on the table? Basically, the clothing, mostly the pants, they lacked colors. And this is something that was very preventable, in my opinion. But something like newer style of bags and the two tones or the two toned tote that went really well. That's something you can't really predict. So chasing after the opportunity there, that's good because like I already said, you cannot really predict how well a product will do. And they say that they left the opportunity there somewhat on the table, but maybe they could have bought with more depth. That's what they say. I don't see it as a huge issue to take or to hold them accountable for, but it's a good thing they help or they hold themselves accountable. Now, what other things stood out? The company did a bunch of stock buybacks. During Q1, they bought back about $300 million worth of stock. Now, I believe they said this was around or with an average of $395. So that's not really great. However, so far during Q2, they already bought back $230 million worth of stock. So that's a total of $530 million year to date. And they got an additional $1 billion from the board of directors for stock buybacks. That means they now have 1.7 billion available for this. That means that they are extremely aggressively buying back stock. And a few rows below it, I also go more into that because having such aggressive buybacks is really good. This company is trading historically extremely cheap. They upped their EPS guidance, and with their new guidance for $14.27, these stock traded at a 21.6 times earnings multiple based on the market close prior to the earnings report, and a 21.3 times earnings based on the high end of the guidance. That's extremely low for this business. I believe that they normally trade around 28 to 30 times from top of my head. So they are trading extremely cheap right now. And that's due to some uncertainty, but uncertainty doesn't mean risk. And they are fully capitalizing on that uncertainty with buying back stock. They also said that buybacks are their preferred way of returning capital to investors. And well, I can't blame them. It's more efficient in some cases than dividends. Now, they also mentioned the exit of the chief product officer, and McDonald said he had been in regular conversation with Chu, the chief product officer. He knew about her personal and career goals, and he followed this up by saying, "We regularly update our succession plans, which allowed us to seamlessly step into our new planned leadership structure." Now, they switched around some roles, positions, some people got additional responsibilities, and people reported to others. Now, if this is as true as he says it is here, that's perfect. Then there's not really that much going on because, as he said it allows them to shift more rapidly, have shorter ends for communication. So that's good. And then the last thing I want to mention, and this was something I found quite quite notable, quite positive, is that Lululemon reported to have seen gains in market share in both the US apparel industry and the US activewear industry. Now, this is for adults, that has to be said with it. It is for the adult apparel and adult activewear industry. But the company saw outsized market share gains in the men's market, but women's market share didn't really change due to the missed opportunities. They really got back a couple of times that they were the ones that missed opportunities. They were in a good spot, but they didn't fully capitalize on it. And that was very honest. I said it before. I think it's great that they hold themselves accountable. They don't come with excuses. They are not saying, hey, maybe this caused it or that caused it, this war, that war. No, they didn't. They were very straight to the point. Now, traffic was positive in the US, but they lacked a bit of conversion due to the missed opportunities. Some smaller sizes were also out of stock. So that's what they said in regards to that. So then, what's my opinion on all of it? Now, overall, my opinion can be quite easily summarized because as I wrote it in my article going over the earnings report, I said overall I think they are very good. I had a few question marks going into the earnings, which have been perfectly answered. But I can't help to look at the revenue guide. They guided revenue that was around or slightly below what was expected. I also said it in the morning market feed this morning. Companies that miss guidance have often sold down. This is what we have seen time and time again. If you miss your guidance, your stock will, well, it will just crash, basically. You have to beat guidance. And this wasn't done. And I wrote this before pre market open as the stock was up 10%. While starting the day or directly after the earnings report, stock was even up 13.5%. So it sold down a bit already during the earnings call. As the market opened, the stock initially sold down to the point where it was up just 2.5%. This is where I really thought, like, okay, we're gonna have another one of those. I've been through PayPal going from $70 all the way back to 62. I'm gonna release a video out about that one, by the way, later this week because there is something good happening there. But that's not what we're talking about here. Let me get back to this. The good thing about the guide was that the full year EPS guide, which was now raised above expectations. You may have already seen it in one of my other slides. Basically, they raised their EPS guidance from $14 to $14.27 or $14.20 to $14.27 to $14.47. That was due to well revised interest earnings outlook because interest rates are staying higher for longer. They get more interest income, of course, and that's going straight to the bottom line. There are no costs involved whatsoever. And due to the immense buybacks they are doing. Now, with the revised EPS number, future buybacks are not taken into account, but the buybacks that have been done up to this point are. Okay. So let's look at one more thing I found really smart, which was the aggressive buybacks. The stock is trading historically cheap, not just cheap, but incredibly cheap. Buying back stock as aggressively as they do not only radiates confidence, but it's also the best place to do it as it takes the most amount of shares out of the market, thus increasing your percentage stake in the company. This is just basic math. Lowest share price with the same amount of money being pushed into it means more shares taking off the market. And that means your stake, my stake within the company gets increased a lot. Something I did not like was the fact that they missed opportunities due to the lack of colors. I think it's great how honest they are about it and take responsibility, but lacking color for leggings is something that was preventable. I also told this already. That was a bit something that I thought, like, well, okay, you could have done better on this. The shortage on a new product like the two-tone tote is more of a luxury. It's hard to predict how well such a product will do, so I won't be too critical on that. As I already mentioned, I really liked how open, clear, and transparent McDonald and Frank were. The stock absolutely needed it, but that doesn't make it a given that the executives will take the responsibility and explain what's happening like they did. Before the earnings came out, I wrote a hot takes in which I explained which question marks around the business I wanted answered. But I will go deeper into this in my upcoming YouTube video. Now, there is one thing I said I wanted answers on that I haven't mentioned yet, and that is the freight rates. Now, these went down. They said that the air freight rates went down for them. That was partly due, or that was partly why they increased their gross margins. So that's a very good thing. They also mentioned that, and yeah, that's just a huge positive. Now, if you want more updates regarding, well, the stocks I follow, which are growth stocks, mostly tech, but not all of them tech, because, well, Lululemon, obviously, not a tech stock, but my second largest holding within this portfolio. So if you want more regular updates on them, articles on them, about things that stick out that I found worthy to write about, make sure to subscribe to the morning market feed. This is my newsletter where I highlight everything from the prior day and included a stock analysis once a week. So every week you will get an analysis from a company like S&P Global, Moody's, Adobe, Shopify, MSCI, FICO, Robinhood, SoFi, or Duolingo. Basically, all kinds of growth stocks through various different stages in their life. Because I think stocks like Robinhood, SoFi, Duolingo, these well, not small caps, but they have smaller market caps. They offer great growth opportunities, given you buy them at the correct price. But having a portfolio consisting only of them is way too risky. You got to offset that a bit with some mature companies. Now, mature companies don't mean they cannot grow anymore, because S&P Global, Moody's, Adobe, they have been very steady growers, but they are way more stable and way less volatile. In terms of growth, they can be a bit of an anchor on Robinhood, SoFi, or Duolingo, but they provide stability. And with that, also companies like Shopify, MSCI, FICO, huge growing stocks, but a bit in between there. They are also very good additions to your portfolio. Now, if you want more information about that, more news about it, stay up to date with the markets, the macroeconomy, because I do also highlight some important macroeconomic factors. Make sure to the morning market feed, and make sure you like this video if you have enjoyed it, and subscribe to my channel. And with that being said, thank you for watching. I hope to see you in my next video. Bye.